In this video, we are going to be analysing the S&P 500. To do this, we are going to be using the SPY ETF. So to get straight into it, firstly, one thing I did want to note here, you can see this $384 level. This is what is considered the bear market line. What do we mean by that? That is 20% from its high. Usually when you're below that, you're considered now in a bear market. When you're above it, more of a bull market. So this was interesting. Last week, we did see a retest of this level, a sharp pullback, but coming into Friday, we have retested it and actually closed above it. So this could be a good indication that we may continue up for the next few days. But again, the key thing to be watching out for, especially if you're trading SPY, but really any market in general, be paying attention to Thursday. This is when the Fed comes out and releases their rate. And if, again, this is going to have a big impact on the market no matter what, even if it comes out as expected at another 75 basis point hike, that is still going to have an effect on the market, because even though that is somewhat priced in, you will still see a massive reaction. We've seen it even on, I think it was a Bank of Canada move, or even yesterday on what came out yesterday, I think it was consumer spending. We literally saw the NASDAQ move 600 ticks off these moves. So even if they're coming out near the expected value, there is just so much volatility in this kind of market. So it doesn't matter really what it comes out on Thursday, just be paying attention to it, because it could come out, if it comes out below expectations, you know, they only hike 50 basis points, SPY is going to fly. If it comes out at 100 basis point increase, obviously the SPY is going to sink. Or that's how they should react. Again, you can never be you're never 100%, especially in this market, but that's usually how they react. If interest rates are going up, companies are going to be less profitable, therefore stocks will fall. Again, if interest rates are hiked less than expected, stocks will rise, because again, it's cheaper for them to borrow new debt, but there is more potential growth that they can do. But now, if it comes out as unexpected, this is going to be the key one, because in normal markets, you know, if we were going back a year or two, you could fade these moves. If it comes out as expected, you tend to see a large move in the stock or the S&P 500. You could usually fade that move. It will return to where it came from. But in this kind of market, the direction does seem to be playing out a bit longer than it would. Yes, you can potentially fade it, but sometimes it takes, 15, 30 minutes to do that, and you don't know how far offside you are going to be. So really, you need to be watching this, because or at least taking out your position. If you don't feel comfortable trading the Fed release, then don't. But don't be in the position, because again, it will move massively, and that is going to be the key thing to watch. So anyway, onto the technical side of it, because I've talked about that for a bit too long now. What are going to be those key resistances we're paying attention to? So on the SPY, we have a resistance at $398. Obviously, again, be paying attention to that $400 as well. Use that more of a range. I mean, even if you go back, you can kind of see it was used as a range here. And the reason for that, again, not only is that a first deviation, but then you've also got the key psychological level at $400. And again, you can even do it as a bigger range if you want. And really, probably I would in this kind of sensitive market. Because 404 again is our first deviation then on the daily. So really, I would use this more as a zone. Within this zone, I probably wouldn't touch it. If I was long into this move, I would be looking in at least some profits coming into here. And yeah, I mean, I wouldn't really be shorting this right the way. I mean, I would see if it can start closing below. And again, on Thursday, this would be probably the most likely key day to be watching. We don't know how volatile the SPY is going to be during this week. It may be quite lackluster, just waiting for that Fed release. But really, if we see a move into here, you quickly see a snap below and maybe a close below on like the 5-15 minute on the release. That may be a good indication that maybe you can actually start fading it to the downside. But again, maybe do some testing on the recent releases and start seeing how they can react and see how their patterns play out. But if we do break that and you are looking up for further targets, or again, you're not paying attention so much to the Fed rates, you're just paying attention more to the longer term outlook, then 425 would be that next resistance, going on to 440 and 450. Going further would be 475, 472, and a final level at 506. So those would be the key levels that I would be paying attention to as resistances. What are going to be key supports? Again, obviously this bear market line at 384. Be paying attention to this. If we start closing back below this, good indication that we will continue lower. But again, if you're looking at it this week, I wouldn't be paying too much attention between Monday and Thursday. Again, waiting for that release. It may just chop around this area. But if we start breaking that, be paying attention to 370 / kind of 369, as this is going to be our statistical mean. Again, statistical means we don't tend to buy or sell off these levels. They're just usually areas where once it reverses out of this area, we tend to close our position or at least move our stops at the minimum, because this is just where we expect price to reverse to. So once it comes into here, it's a lot more of a gamble in which direction it will go from there. Now though, if we break that and you're looking more for supports, we would be looking at 345, 335. Going lower could be 318 and 301, and really those would be the key supports of the downside in the near future that we're paying attention to. But considering, I think it was since October 13th, the S&P's up around 12%. Don't forget, like we know, if you trade stocks, they can go up a lot. Well, they go up a lot slower than they fall. So again, even as S&P has been looking strong the last few kind of 2 weeks or so, it can easily fall back down. So don't be thinking this is going to be the market bottom. It may potentially be, but you can never be 100% sure. So always be cautious, always be managing your risk, because really it can continue to crash, and if it does, it is going to go a lot faster than it went up. So always be cautious of that. And that's why a lot of people in this kind of market prefer short selling, because again, you can get a much better risk to reward in these kind of trades. But anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.